is that they don't zoom out. Brother, the higher time frame, the more relevant the move is. So the higher time frames will always be more relevant than the lower time frames. And you know that, but you're just not zooming out. Sometimes they will show me a setup will look like this kinda. Up, let's say price setting lower. Here's making a fake breaker structures, breaking liquidity again. Bro, we just made a smart money trap here. Price is good to long. You have your order block right here. I'm looking to place myself here, bro. Looks good, right? And I'll say, yeah, bro, this looks perfect on lower time frames. But once you zoom out of this, you'll see that previously price did something like, I don't know, this. And then once you zoom out, you notice, well, this is a support. Okay, so you're just looking at this, you're just fixing yourself in this 5 minute time frame. But then once you go to the hourly, this whole level is a support. And so that goes against your logic of trading liquidity. Because who cares about this smart money trap when you have this big of a support resistance right here? Right? You can even have this as a smart money trap, but it's not even because the smart money traders that's trading like that's going on at least hourly or so would never trade this. So you're being even worse than them as far as trading liquidity, all right, with our reasoning. So this is completely against your logic. And that's what I'm always saying. Bro, looks good, but hey, zoom out. Zoom out. Same thing I told the guys on Discord today. Hey, this right here, let's say, uh, forget it. This right here took liquidity, fake wicker structure, took this liquidity right here, okay, from the previous, from Monday. It's not a previous day, but it's a previous couple of days, and it's good. And it's a good liquidity to take, okay? So we took this liquidity out. We have a double equal low, equal high, sorry, in here. So perfect liquidity. Bro, this looks good. Took liquidity right here, so it's protected, and confluence liquidity equal highs as a confluence to head higher from here. And I say, yeah, bro, this is this is good to trap smart money traders. Once you have like some high that took liquidity, then it goes massively up, and then it builds liquidity for them. This is perfect for smart money traders. But not just that, zoom out, brother. Just the hourly, and you'll see. What's this? A perfect trend line. One, two, three, four, five touches. You think this is gonna hold? You really think this is gonna hold? And plus, this now is the previous daily low. If you think this is gonna hold, I mean, that's on you, brother. I just know this will break. I'm pretty sure of that. If it doesn't, well, I'll delete my channel. So yeah, you can go back on this day, and if that happens, I'll delete my channel. All right? If it goes from here and stuff. But even then, if it goes here, it will go here. That's for sure. Or even here. That's for sure. If you think this is gonna hold, all right, good luck, buddy. But yeah, I just want to let you guys know that don't focus too much on the 5, 15 minutes. Zoom out because the higher time frame will always tell you the more significant story and where price is gonna head. All right, because also a good thing to keep in mind as the forex sentiment. So I've talked about this before. If you go on Forex Factory, for example, and you scroll down, you see how where most people are positioning themselves, and this is the retail positioning. All right, so you can see how most traders have a short bias. Now, if most people are thinking a certain way, do we want to think the same way as them? Do we want to be with the majority? Well, no, right? Because 95% of traders lose. So why would you want to think the same way as them? So yeah, if most people are short, and I can understand why, is because they're trying to call the tops because EU is has been going massively up. You want to do the opposite. I know this has been massively up, and there's a big imbalance to come right here, but you just want to do the opposite. Because if you were to try calling the tops and you had your stop loss here, stop loss here, stop loss here, stop, you already lost a bunch because you tried to call the tops. Better than call the tops is just following the trend. Go along with the trend. Don't try to counter it. Because maybe you're not even that good enough to call in the tops or call in the lows. And if you were to notice that this level, I told you is clearly a trap, this level as well, and we need to make efficiency or price high here. So I'm assuming that EU is going to continue to go higher. It can go up forever. Of course, you got to trap people on lower time frames, and sometime in the future come to this imbalance. But I mean, if people continue to short, then we can continue to go up because we're gonna have counterparts. Okay, and so yeah, instead of just trying to short, calling the tops, you could have just bought here, bought here, bought here, boom, maybe bought here on this, bought here just for this, maybe. But yeah, boys. Or you can also short, obviously. I've done some shorting positions. Of course, you're doing a counter trend, so don't expect much risk to reward, but you can get some small little reactions that can get you a TP. Because here we took liquidity, reaction. Here we took liquidity, reaction. That's why when I teach how you trade my strategy, is that you can pretty much short or buy in whatever market we're on. Okay, so if we're in a bullish market, you can do both. You can do both because liquidity goes from one liquidity price goes from one liquidity to another. Sorry, and you can pretty much ping pong the market, buy, sell, buy. You know, but if you want to have a higher win rate and so be right more times than not, you just have to follow the trend, and meaning you have to focus on buys for this moment. So if you focus more on buys, then you have more chances of winning and more chances of getting profit. All right. If you're on drawdown, don't risk it and placing counter trends because you're gonna be doing risky trades, obviously, and risking more of going even deeper into your drawdown. And so I would only focus on high probability trades, meaning trades that are confluent to the higher time frame, but also to the trend. Okay. And but if you're like doing good with your P&L and you want to up your frequency and you want to have more trades coming in because you're building a buffer with your P&L, you're building a certain amount of profit, it's all going good, and you say I want to take on more risk, you can definitely have these short positions in the market, and you can scale a little bit further if you have more profits. But if you're not at a level where you can do that, just focus on trying to follow the trend because you'll be way better off than just calling the highs or the lows of the market, because it will be very hard for you to do that if you ain't got that much experience. All right. So I hope this has been valuable for you guys. Just zoom out when in doubt. And yeah, boys, watch out for the smart money traps. Okay. Peace out, boys.